Hello guys, today we are going to see an interesting topic which was first introduced by New York Stock Exchange, NYSE. So it is called dollar cost averaging. So it is basically a monthly subscription plan where you give a certain amount of dollars monthly, you put it in stocks, and you don't see whether the market is low or down. Don't see anything. You just invest in good company stocks, and over a period of time you'll reap good results. So a perfect example of this is they have calculated as how dollar cost averaging could have worked in the worst times of the economy of American stock market. So it was in the time of 1929. Example is if you have invested rupees $12,000 in 1929. Then after a period of 10 years, the value would have been 7,300, in the range of 7,300. So the value which I have invested in 12,000 in has become really low. You cannot say 40 to 45% maybe. It has dropped to that level in 10 years. So there would be depreciation also, inflation also during that level. So in addition to the inflation, it has reduced to 7,500 levels because of the price of the stock. But the same thing, so $12,000, if you divide it into 10 years, it's 120 months. If you divide it, it will become $1,100 each month. So same, you start at the same amount of time, 1929 September, you invest $100 each and every month consistently. You just invest, you don't look at the market. At this end of the year, the value of the stock would be $15 and 300 $15,300. So $12,000 which you have invested little by little over, okay, has become $15,300. But at the same time, if you had invested it at the in a bulk sum amount at the start of 1929 September, then it would have become $7,300. So this is the power of dollar cost averaging. So this is the worst bear market considered by the Americans. Even at that time, the dollar cost averaging performed really good. So that is a really a good sign for this method. So this is about more about dollar cost averaging. So there have been so many methods around the globe, but there haven't been such good promising results other than any other method investing. We don't know, there might be fault in this method also. I cannot assure you this is 100% the right method to invest, but so far it has been a very good investing strategy. What this prevents is, it prevents you from getting into the market at a wrong point of time. Suppose we will get, you think that Nifty has got to a slow, and you put all your money in it, but to your unfortunate or whatever, the Nifty gets below that point even further. So let's take Nifty, you entered at a particular time, the Nifty got below, then it requires only 4 years of time. Only after 4 years, then the stock prices will get to the point where you actually bought it. So 4 years you have done nothing, and after so many years it might increase. Only then you will get your return. So it's you have put all your money at the wrong point of time. You should have put even after that, when it has become even low. But we are not astrologists, we cannot detect it that so well, because stock markets are directly proportional to the people's emotional also. So what they think about the company, and all this depends for us to all this decides the price of the market. So but at the same time, if you had approached dollar cost averaging at the point of time, you would have invested a certain amount of time at that point also. When you thought the Nifty was low, even when it is even low, you would have invested systematic amount every time. So when it explodes, you will get good results. When it bounces back, when the market bounces back, you will get spectacular results. So that is the power of dollar cost averaging. So one thing I should clarify is, I'm not a SEBI registered advisor or something. the stocks or something, stocks which I discuss, if I discuss in with this video or future videos, are purely based on my thoughts. And if you are willing to buy a stock, please contact a SEBI registered stock advisor, ask his advice, and open your DMAT and all the procedures, and you can buy stocks. So cheers, thanks for watching the video. If you have some other questions or doubts, I plan to speak about the annual reports of companies' balance sheets. So if you have any suggestions, you can put it in my comments. I'll try to do a video for that. Thank you.